Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk. I wanted to talk to you about something that's quite important, and that's how to classify an asset. In my mind, I've created three categories for myself: investment, speculation, and gambling. I'll go into each one of those a little bit more further in the video, but it's definitely something to consider when you're purchasing an investment. Keep in mind, these are all my opinion, and it's just the way that I look at the world. You can feel free to make up your own mind, and if you want to have a discussion, feel free to comment down below and we can have a chat. However, this is how I've been investing my entire life, and it's worked for me, so I thought I would share. The first classification I call an investment, and I define it as an asset that has a steady stream of income or cash flow. Examples would include dividend paying stocks or investment real estate with a positive cash flow. Now, if you don't know what I mean by positive cash flow, it means you have money left in your pocket at the end of the year after the insurance has been paid, after you've covered the vacancy time, after you've covered various things that you would have to fix on the property, and you still have money in your pocket at the end. The value of all of these assets is determined by the series of cash flows. So either the dividends or the money that you are positive at the end for the real estate. My second classification would be speculation. I define it as an asset that goes up in price because somebody else places a higher value on it. An example would be a stock with no dividend, but where the company is making a profit and is getting a resulting price appreciation in the stock. Or it could be real estate with no positive cash flow, but the value of the real estate is going up. Other examples would include Bitcoin and gold. It's basically an asset where the value is determined by somebody else willing to pay a higher price for it and therefore bidding the price up and the value going up. But there is no cash flow. My last classification is gambling. That's an asset that on the average is going to stay the same or even go down in value, but it may go up. So it would be stock of companies that don't make a profit and may not get any price appreciation, or real estate with no expected price appreciation. Basically, it's not going to do very much, but if you get lucky, it may, just like in Vegas. So to conclude, myself, I would prefer to buy investments, but there's lots of people that are okay with speculation or even with gambling. I prefer to have a steady stream of cash flow coming in either through dividends or through rent, where there is money left in my pocket at the end of the year. There's lots of people, however, who are okay buying stocks that don't pay a dividend, who are okay selling 10% of their shares in order to get some cash flow. It's perfectly valid. It's just not my preference. There's lots of people who will take a gamble on a company that's not making any money yet and will purchase their shares in the hope that they start making a profit and maybe pay a dividend later on down the road. It's likely that nothing great will happen with that company, but if it does, they will win big. Again, just like in Vegas. If you have any requests on what you would like me to cover in future videos, please put that into the comment section as well. Like, subscribe, ring the bell, and may you have a profitable day.